Everyone, let's talk a little bit about Paramount, as we're tracking that this morning too. Shares of Paramount Global rallying on revived merger talks, according to reports. Production company Skydance has reached a preliminary agreement to buy Shari Redstone's National Amusements, a controlling shareholder of Paramount. Now, if that deal goes through, Skydance would then plan to merge with Paramount Global. Here with some analysis, we've got Geetha Ranganathan, who is the Bloomberg Intelligence senior media analyst. Geetha, just take us into what is finally happening here, it seems like. I mean, it feels like we've been going back and forth on this since the Obama administration. So what exactly does this mean for investors out there, but also perhaps for consumers?
Yeah, thank you so much, Brad. Good morning. You're absolutely right. This has been dragging on for months and months right now, more than 6 months, I would say. And this is basically what we're seeing is a re-engagement with Skydance Media from the Redstone family. Remember, the talks had completely broken down just about 3 weeks ago. We were almost at the finish line. And in the last minute, you had Shari Redstone kind of swooping in and saying no go to a deal which she had principally agreed. So again, there's a lot of uncertainty here. Shari Redstone will call all the shots. But what we are seeing in terms of what this means for investors, again, with Skydance, what we've constantly seen is that they are proposing a deal which basically favors Shari Redstone, who is the controlling shareholder, favors her over everybody else. So it favors her over Class A shareholders as well as Class B shareholders. And that is something that has the potential for attracting a lot of lawsuits. And that is something that has made Shari Redstone extremely wary. And so it looks like this time around, there is much stronger indemnification language in the agreement that should or could potentially protect her from a lot of the upcoming litigation. But again, none of the deal terms really are very clear at this point, other than Skydance offering about $1.75 billion for National Amusements, which is again the parent company of Paramount, and that there is this 45-day kind of go shop period. I think what it means for consumers, again, is just a whole lot of uncertainty. What we've seen Paramount do recently is they've raised the prices on their Paramount Plus streaming service. So again, what we're seeing is, streaming products all across the board, higher prices, not really a good thing for consumers.
Geetha, it's Madison. It's great to speak with you. Thanks for coming on. I'm just interested in your take on the degree of the upside move that we're seeing in the stock off of this news. It's up over 13%, obviously surging overnight and into the pre-market here. What does that tell you about sentiment from these shareholders?
Sure, Maddie. So I think they're, shareholders obviously are just excited that, M&A is back again on the table. I think just over the past few days, we've kind of seen a change, I think, in overall sentiment. There is obviously now this specter of possibly a Trump administration, and that obviously will ease the regulatory climate. And maybe that's part of the thinking for Skydance and Shari Redstone as well. But the one thing that we have to remember is that the longer and longer this whole process kind of drags out, the less and the less value that the assets will have. And I think Shari Redstone realizes that. She's been publicly negotiating for 6 months. That's something that's highly unusual in the media landscape, in any M&A deal for that matter. So for her to come that far and then just drop everything again, that was obviously, it created huge overhang on the stock. And I think she's realized that, which is why she's back at the negotiating table.
Wow. Okay. And so now, as we're kind of really trying to wrap our minds around what this means for the larger media landscape. I mean, this was one of the last major deals, it seemed like, was waiting to finally get over the goal line here. I mean, it's not signed, sealed, delivered just yet, but is this the end of the big deal making, or should we expect more?
I think we can expect a lot more. And I only say that because, media is really in a bad place right now, and that's traditional media. So we've seen kind of the linear network business really being in secular decline. We're seeing more and more people leave the traditional pay TV ecosystem as they kind of migrate to streaming. And that's really not good for companies such as Paramount, such as Warner Brothers Discovery, such as NBC, which have huge exposure to the linear TV model. So obviously, again, it's going to depend a little bit, Brad, on the regulatory climate. But I think if it becomes, much more favorable, I think we're going to see a whole slew of deals, which will include a lot of these legacy media players, whether that's, Paramount, Warner Brothers Discovery, maybe Sony, maybe Comcast and NBC. So I think there's a whole lot more to come.
Really great insight. Geetha, thank you so much for taking the time. Geetha Ranganathan, who is the Bloomberg Intelligence Senior Media Analyst. Great to see you this morning.